Thank you for watching another video. It's actually been quite a while since I recorded the last one. I've just been really busy with family commitments and most recently just getting over a cold. But before the markets opened today, I'd actually got my analysis written down and I was in a bit of a stalemate because I couldn't actually work out what the bias was going to be. And what I also am doing is I'm going over the earlier teachings in the mentorship, and I got up to I think 13, 14, episode 14, and then I've started again, just taking it back to basics because I think I'm getting a little bit hung up over the whole daily bias and trying to forecast really where that next extended run's going to come from. But if you go back and to those that have actually got the benefit of remembering to the earlier sessions, like episode 2 and 3 and 4, what Michael actually teaches is just looking for that run on liquidity on that 15-minute time frame. And what I've been able to do with that in mind now is I've been able to bridge a little bit of a gap in my mind as I'm still learning this this trading style. So what I wanted to do is I just wanted to do a quick video really and just explain what do you do if you don't have a clear indication of what's going on and how you can still create a framework to pull out a successful trade. And when I was actually just back testing this in hindsight later on this afternoon, it made me realize that there was actually a 5R opportunity that was missed. So I want to start on the weekly time frame because you can see here we've actually got a nice rejection of these equal lows here. So as per Michael's teaching, once you've actually taken the sell side liquidity, or if you just sort of clipped a level here, you can have one of three things happen. You can have an outright reversal, you can have simply a pullback, or you can expect consolidation. So either way, you're anticipating a change in the state of the market. So last week we had this bullish engulfing candle, and naturally as a retail trader you would expect a fierce follow through because you'd be picking the bottom as we did here. If you think back to a few weeks ago, we got this bullish engulfing candle with this swing low on the weekly time frame, and we basically just had a little Judas swing to catch the open interest here to go long, and then we've actually just trapped it within this range. We worked both sides of the market and then we crashed down, we've gapped, and we've had this price action come here. So I was expecting something similar to this to occur here, and when you go into the daily time frame, you can actually see, so we've broken this short-term high, we've filled this gap. The next level on the daily time frame is this for me. We've also got this here, so this is a breaker, so we are actually within sight of this breaker. Now we might have overshot it ever so slightly, but this could also be acting as resistance. But what I want to do is just take that off, like I say, add some framework, so you can't really see anything on the daily time frame other than this level here. So on a daily time frame, we've actually broken the high here, so we could be expecting some form of retracement, maybe down to mitigate 50% of this candle into here, and then have a little run up higher, because overall, and if we take the weekly range, we've actually got this daily range here, so premium discount, so we're currently bang smack rejecting the 50%. Are we going to sell off from here? Possibly. Would I like to see it come up here before I consider the short? Definitely. So if I go down to the 4-hour time frame, I'm now looking for areas within a premium market that I could look to get short on. So we've actually got this high here, but what this high is in fact just a trade back to, and just for sake of clarity, delete this tool off. So this is actually a fair value gap on the 4-hour time frame where we've just tapped it again. So you could have the fair value gap, lower boundary here. We've already got that upper boundary, which is also coincides with the daily fair value gap upper boundary. And so we can have this here. So you can see how the 4-hour time frame has respected that nicely. Go down to the 1-hour time frame, and then bringing in the teachings. So 10 p.m. So this would have been the Asian session. We've actually taken the Asian high, and then if we go down to the brown weather time frame, 15-minute time frame. Okay, so we've had a run higher. We've also got a 3 drives pattern as well, 1, 2, and 3. So we've got all of that lining up, and then we've got a short-term low here. We've actually got a lower low. So we've actually shifted the market to the downside, and obviously we've had that occur here, but this is where you really need to be strict, because this is in the middle of no man's land on the higher time frame. So yes, we've actually had a shift in market structure on each of these, but we don't actually have the confluence of it actually reaching for that high time frame liquidity. So where we've actually poked into that liquidity here, we've had a short-term low here, shifted to the downside, we've come back up, we've got no fair value gap here at all until this move here. So this is a fair value gap from here to here. Let's go down to the 5-minute time frame, and we do actually have some in here, but when you're observing that displacement on the 15-minute time frame would have been here. So there's your 5-minute fair value gap, and then the rules are, as soon as you have that fair value gap on this candle here, this one, you'd have placed an order, and then as per the rules, so you got candle 1, 2, and 3. So your stop loss would have been just above candle 1 of the fair value gap. Now the context for it, what I want to do is, if you go to the 4-hour time frame, we've got this downward candle here, which is actually a bullish order block, and that probably look better on the 1-hour time frame. Here you go. So all these candles here actually give you an order block, and this would also give you your sell side liquidity. But because, given the fact that last week, and sorry to just jump through the time frames, but given the fact that we had such a large range candle here on a weekly time frame, if we are looking back at historical price action here, then what this shows us is we've actually gone from a strong bullish week into a range bound week, and then when you go to the daily time frame, we know just what that looked like. So just after that run, we've actually had this small indecision candle because we're reaching an area of influence, and we've had a long range week. So with that in mind, you're not looking at any home runs. So the context really, it's framed on the 4-hour time frame here, because you've got the fair value gap lower boundary here, and if I was to just add that, you can see this here, so the bearish fair value gap there. So you've got that, but then also you need to be considering the profit targets for your 4-hour time frame. So if you look at what that looks like here, so you've got these relative equal lows here, better observed on the 5-minute time frame. There you go. How suspicious does that look? So you've dipped into your 4-hour PD array, which was your fair value gap. It's in a premium overall on that weekly dealing range from here to here, and then you've got your displacement on the 15-minute time frame. Yeah, you've got your fair value gap on your lower time frame, or your micro time frame, your 5-minute time frame here. So as per the entry criteria, you have then this, which is we go here. So so you've got this here, which is going to be one of your profit targets, and then you've also got the overall profit target objective down here. So your internal liquidity is going to be below this one, below this one, and below this one. And sorry, below this one is your external range liquidity. So if you were looking at taking full profit target objectives, and if that was right on the top of the candle, which is obviously given us a best case scenario, you've actually got an opportunity there worth 5%. And how long did it take you to reach that objective? So if you were front running your orders, you've probably reached it here. And let's just say that you weren't triggered into the market until this candle. You've got 5, 10, 15, 20, 25, 30, 35 minutes, and you've got a 5R trade potential there. So that there will give you the top-down approach to framing the context around a trade idea given the parameters of the current market condition that we're in. So on the weekly time frame, yes, we've had a bullish engulfing. However, we are being met with resistance here for this bearish order block. You go to the daily time frame, that you can see how that's lining up here, and then also the fact that we are now just crossing into the premium range. So for me, I personally would like to see the move come from up here. So there we go. So that would actually give a really nice run down to take the liquidity down here. Or even if we came back down into this dealing range here. So if we went up to there, we'd had a new dealing range from there to there. Then we're having a look at taking some profits up down here, just in case we give, as what the retail world knows as, an inverted head and shoulders here. So you've got an intermediate term swing here, long term, and then another intermediate here for potential bullish move up. Because if you look at the monthly time frame, we are rejecting the previous month there as well, which is also this area of influence. It's the 27th of June now, so we're actually looking at closing the month. So we've actually taken the liquidity from the low of this monthly candle. However, we've failed to close below. We've also come in, we've taken the liquidity from these equal lows, but we've actually failed to close below that order block there. So is this being protected? I think it's just too early to tell, but overall we're still bearish. We just need to look for more confluence really to look at taking a short position, ideally I think for me up here, but we'll see. Anyway, I hope this has been insightful, and if you do find it useful, and then you know anybody else in the community that you think would benefit from it, please do share it with them, and don't forget to like and subscribe and all that funky stuff. As and when I get to grips fully with this, then I'm going to be doing a lot more content. The journey so far is about me understanding and interpreting and blending that with my existing information that I've picked up over the years, my experience of the markets, and fully going over to the ICT way of thinking and trading. Anyway, thank you, and speak to you soon. Bye.